Good afternoon, everyone. This is Henry, and as we get into tonight's video review, I wanted to start with a passage here from Mastering the Trade. This happens to be the third edition, though a lot of these concepts have remained the same. And if you wanted to pause this and kind of read, the first part of this paragraph, I would let you do that now. But for the video, I'm going to direct your attention down here into this second paragraph that notes, if the combined equity index put-call ratio reaches over 1, I'll ignore short setups and start looking at long setups. It goes further that a ratio of over 1 represents extreme bearishness, put buying, and as a result, the scenario described places a floor in the markets. It's not an immediate floor. When the ratio goes to 1.0, the markets don't suddenly stop declining and then immediately rally. It's a process, but a visible support level can take shape because of the simple fact that there are too many bears in the market. So I enjoy referencing this at times when I feel like we have very good examples to show. So understanding that this is a process, the signal that you want to make sure that you're aware of is this cash sign P call here in Thinkorswim, and showing that the put call ratio has reached its second best level of the year. So we look at this and we see where that closed today. We see that the markets have been in that decline for several sessions now, so sentiment has shifted in a more bearish favor. And then come back and look at this in previous instances. Now you've got a few wicks that have seen some strength, but look at this as being the only other time that you had a daily close above the 1.0 value. So if we look at this instance, that shows us another moment in time where sentiment was very extreme. So if we note that as being the January 17th candle, we can then come down here into the spiders and look at this to see what happened on January 17th. Now this was only, 3 days down into that drop, but from that extreme bearish moment in time, the market had a very substantial rally. So I'm not telling you that it's imminent. If anything, I want to tell you that the SPX could very well see another leg lower. So what you want to watch for tomorrow morning, I think, is a path that comes down and gets at least 5,000. From there, we could move down into 49.50. But as those, or if those flushes were to occur, look at that put call ratio. If you're seeing more readings above 1.1, 1.2, then I think you're going to be getting into a much better spot to be trying to buy something into next week. And that is the trading plan that I will be taking into tomorrow. So I hope you find it helpful. Have a great rest of your evening, and I hope to see you in the chat room tomorrow. Hey traders, this is Henry with SimplerTrading.com. I wanted to thank you for watching today's video. I hope you found it helpful, and if so, be sure to click the like and subscribe buttons down below. If you would like to also see me putting these ideas into action and trading my own account live in front of you, be sure to sign up at SimplerTrading.com, and I hope to see you in the chat room sometime soon.